All right, everyone. Hope you're enjoying the conference so far. And we're going to be talking about DeFi for small businesses. Joining me are Ryan Berkun from Teller Finance, and Ryan Berkun from Teller Finance and Ryan Rodenbaugh from TrueFi. Thank you for joining me today, guys.
Thank you for having us, Jason.
Well, let's get right into it. So, when we're talking about DeFi, the people in this room may know what DeFi is, but how do you introduce DeFi to someone who may not know what decentralized finance is? Brian?
It's a great question. One of the most obvious use cases is remittances. I think if you want to send money from the US to Asia, to Africa, to Europe, or vice versa, the current remittance market is pretty expensive and cumbersome, and the simplicity of trading your US dollars to USDC, having a stablecoin on chain, and sending that to another part of the world in 15 seconds or less is pretty magical, and with almost no fees. I think that's a pretty straightforward way to explain DeFi to someone that's not even in the crypto world. But then I also believe that many get into crypto because of the Bitcoin narrative and our beliefs in free sovereign money.
Before we go on, tell us a little bit about your organization. So you've been around for about a year or two now. Can you explain Teller Finance to the audience and tell us what it is?
Yeah, definitely. So Teller enables no collateral lending pools on chain, and we're very catered toward the Web3 native consumer. So if you are a borrower or a user of crypto today, you've been building up credit, whether you know it or not. And that comes from public, transparent financial activity. That credit should be able to be used to get loans. So we enable underwriters to spin up lending pools that offer no collateral loans to end consumers that are in crypto today. And would love to pass it off to Ryan to talk about TrueFi, and we can talk about ways that Teller and TrueFi actually work together.
Ryan, please.
Yes. So TrueFi, actually kind of similarly, is an on-chain credit protocol where we do and under-collateralized lending, which is obviously different than the majority of lending that happens in crypto today. We've been around for about 2 years, predominantly lending to crypto-native institutions. We've done roughly $2 billion worth of originations, paid out about $35 million worth of interest, and have maintained 0 defaults across all of that to date. And I think we're different and similar than Teller is we're similar, I guess, in our general approaches to credit, but very different in terms of the end markets that we work with. And in some sense, you can think of TrueFi as kind of working almost exclusively with larger institutions. And one of the ways we've actually been able to work with Teller is to partner with them on some of their more consumer-facing use cases. So, I'll let Ryan Berkun talk about this, but they have a product called USDC Homes where they're doing single mortgages in Austin, Texas, and we've been a partner with them on that, helping to raise capital and deploy some of that over to Teller.
I think one of the interesting intersections of our protocols is the underwriter, because typically underwriters are businesses, either small businesses like we're speaking about on the stage, or large institutions. And some of the most major institutions in the Web2 space today are underwriters or lenders. So that's where the two protocols really come together, TrueFi helping source that capital for these underwriters that deploy it to these end consumers.
Ryan Rodenbaugh, so we kind of skipped over you, I apologize. How would you introduce DeFi to someone who does not know what decentralized finance is?
Maybe I would try and take one level of abstraction higher than other Ryan and just say, DeFi is essentially just taking a lot of the financial use cases that you're already familiar with, whether it's essentially a bank and kind of holding funds, whether it's remitting funds, as Ryan talked about, whether it's the process of borrow lend, whether it's the process of exchange. In some sense, the functions are not actually that different. It's just the underlying mechanisms and how they happen. So it happens on an open permissionless ledger rather than in the E-Trade or whatever database and how these things take place. And so I would try to just draw analogies to how people understand the existing financial system and then get into some of the benefits. 24/7 nature, permissionless. I don't know if anyone here has lived abroad, but I actually live in Mexico City at the moment. And the process of not having a Mexican bank account and none of my friends there having an American bank account is insane. How difficult it is to just pay someone back for buying dinner or something. And I think about just how easy it is to send someone money from a non-custodial wallet even to a Binance wallet or a Binance to a Coinbase. It's just a completely different flow. So.
I like his answer better. I think the analogies make way more sense for the non-crypto individual. I mean, what is a credit card? A credit card is a pre-DeFi technology. And DeFi would just be that backbone for a credit card and all the other services that Ryan mentioned.
Well, that's actually an interesting point because one of the main aspects of DeFi that people discuss is lending. And you have a lot of people who aren't, let's say, able to take advantage of the traditional markets, traditional banking system. And they come to DeFi because DeFi doesn't have that barrier. Anybody can get a loan as long as you have the collateral or whatever it requires. So do you think we'll see more of that in the future, that we'll see people from, say, disadvantaged countries, disadvantaged communities, coming into DeFi because there's not that person saying you can't come in here?
I think this is one of the core advantages that DeFi has. It's so cheap to create a new lending pool or lending market that those who want to assess risk don't need as large of a team as they would in Web 2. And because the cost is lower, you'll see more underwriters launching lending pools to service very narrow use cases and use cases across the world. I think the hard part with this market is that unlike today's DeFi, where you have an asset and anyone around the world can deposit that asset and borrow against it, when we're talking about credit risk, it's very specific to that end borrower. And today we're starting to see DeFi native credit scores come on chain. That is a really exciting area where anyone around the world can borrow against their financial activity in DeFi. And I think we're going to start to see identity blend with that DeFi credit score. Your identity is determined by where you live or where you've lived or where you're from, and this all comes together to those specific use cases, helping different users in different specific regions.
Right?
I take maybe a slightly different approach, which is that I think at the individual level, take one step back, right? Compound and Aave have done an incredible job at allowing anyone to borrow within crypto. But it's not borrowing in the proper form that a small business owner would understand the idea of credit, or an individual getting a microloan would understand credit, because they need to have $120 worth of assets to borrow $100 worth of assets. Perhaps I'm just not thinking as big here. I don't see that the individual process of taking out a loan gets easier, right? If you're in, say, a disadvantaged situation or country and you want to borrow $100, you do still need to find someone that's willing to underwrite that and someone that's ultimately willing to lend to it. And I think that challenge still exists. I think maybe the part where over time this changes is just on the return expected by lenders, right? There is a case where if the DeFi credit markets get so big that a kind of wholesaler protocol can maybe lower the cost of capital that a lender would require, and perhaps offer more fair rates on some of these microloans in situations like this. But ultimately, you do still need someone kind of on the ground, underwriting, and I think that process still stays mostly the same.
I think the other component, too, is the use of capital. So if the loan is fully unsecured and the user goes off to use it in any way they see fit, it is much more risky. If the user is getting access to capital to do something very specific, and if you can trace that activity, you start gaining more trust in the system. So a crypto native example is, if I don't have money to purchase an asset, can I get a loan to purchase the asset? The asset is still secured on chain. You can publicly see the asset being held as collateral, but that's a lot similar to a mortgage. It's not that micro loan helping that end consumer who may need payday access today.
Well, unfortunately, we have to talk about the market. So we're not going to get too far into it because nobody wants to talk about that. But what do you do, or what do you say to someone who looks at CNBC, one of these finance channels, the bottoms fall out, crypto's going down, it's all over, and you're offering your service? What do you say to calm their fears?
I can take this one first. I mean, I might say don't watch CNBC and those channels as a starting point. And then, so our business at TrueFi, Ryan's business at Teller, I do think in some ways, from the perspective of someone looking to interact with us as a borrower or someone looking to run a credit strategy, that is sort of independent of the broader things in the market. Almost the entirety of our loans are denominated in stable coins anyway, mostly USDC and Tether. And so there is a little bit less of that risk and exposure. But say you're working at a larger institution and say you're trying to convince peers that may not be as interested in crypto to want to even interact with a credit protocol like us rather than just go to a bank or something. I do think a lot of that is just general education that as an industry we don't do well. Like whether it's a protocol specifically or just the industry writ large, telling the story of why a lot of this stuff actually matters and not just the 45-second clip on CNBC of chart down bad for a long time.
Brad?
I think that the crypto native demand hasn't changed. I think once users who have gotten into the crypto space and used DeFi, bought an NFT, explored the ecosystem, they're still here. They haven't left. I think it's those early users that got excited about a Bored Ape being worth something around $500,000 and going from being worth originally only a couple thousand. Those users have left, and that's okay because it gives us in the industry time to focus on the true demand that we're seeing. So I actually think it's beneficial to see that the markets are down because there's no more noise. It's purely signal. If you have demand, that demand is real today.
Right. Well, and to that point, it's interesting to me that to the general public, it's still primarily Bitcoin that they know about and Ethereum now because everyone's talking about the merge. But how do they need to know about that in order to take advantage of the broader DeFi market? Is it better, in your opinion, for them to start with the two main coins before they get into anything else?
I think DeFi wins in two ways. I think you have the end consumer who will continue going through the main adoption path of crypto, which is blue pill into Bitcoin, become addicted into Bitcoin. Bitcoin is a gateway drug because it changes your psychological perception of money. And that's why getting into Bitcoin leads a user down a rabbit hole where they become addicted to all the other services we can offer. But I do believe there's another argument, which is DeFi will be the back-end infrastructure rails for all of these consumer applications. I think we started to see that in the days of Terra. Even though Terra may not have succeeded with Luna, you see that fintech applications were integrating DeFi as a back-end rails and showing to their consumers a very simple application to deposit assets that were converted into crypto. So I see those two paths of adoption coming to DeFi.
Right?
Yeah, I would actually say adoption-wise, probably over the past 2 years, I don't have any evidence to back this up, but I would argue probably that Bitcoin was maybe not the way most people got into crypto, and rather it was these things like Dogecoin on SNL and Elon Musk talking about it, Shiba Inu, SafeMoon, where I don't even know where that coin came from, but that was the first time I had random friends texting me like, yo, have you ever heard of the SafeMoon thing on Binance Chain or whatever? I'm like, no, I haven't actually. So NFTs as well, I think have done for a lot for adoption, and so I do think some of these more consumer use cases will probably be where people get into crypto in the future. And the point about Terra actually being integrated into a lot of these neobanking apps is very interesting. I don't know if any of those types of apps are in the audience, but that's actually a priority for us as well, which is it is still difficult to interact with TrueFi directly on chain. But there are these more consumer-friendly neobank-like apps that make it easier to deposit into these different protocols like us, and we're trying to do the same type of thing, but with a much better outcome than Terra.
I think Ryan just made a great point. Our ecosystems are more complex than the over-collateralized DeFi world. You have liquidity providers, which everyone's akin to in crypto. You then have underwriters that assess risk, and you have the end borrowers. In DeFi, over-collateralized, the user is the liquidity provider and the borrower. Here you have three different types of users, so these ecosystems are going to evolve in a more complex way, with user interfaces that make it way easier to understand than just interacting with the smart contracts.
Well, let's look to the future a bit because right now you have quite a few politicians who don't really like crypto, and they tend to frown upon DeFi. So in the future, do you see that the DeFi aspect will take a back seat to the finance part, that'll just be like any other financial market, that we won't have such a negative connotation anymore?
I actually think DeFi is our way to pave really great inroads with the governing bodies of different countries. It's a use case that can truly shine on software, and that's what politicians love to hear. I think there's obviously issues with pools where bad actors could be participating in the pools. We saw the effects of Tornado Cash. But DeFi will continue to be an example and argument to why crypto as a technology set is extremely meaningful. And as more companies adopt DeFi as a back-end institutional software service, we're going to see greater argument from these companies to support the software as technology.
Ryan?
I don't think I have a ton to add on that one. Yeah, I think I agree with everything Ryan said there. I think right now, crypto and DeFi is so in the spotlight because of these giant blowups that we have. And there is less of a recognition for the things that kind of just quietly continue to work in the background. And I think I've seen an op-ed about this topic in Bloomberg, but there is some argument that crypto and this just general infrastructure that is more accessible to people of all income types and such could be a force that could unite politicians. Like, most politicians are anti-bank in some way, right? Like, you do need some financial system. If you're going to be against banks, like, maybe crypto is something you can latch onto. That has obviously not happened in any way, shape, or form, but is something that I would be excited about.
Well, before we open it up for questions, I wanted to get your take on what are some of the misconceptions about DeFi that you hear a lot that you hope get dispelled moving into 2023? Ryan?
Okay, this is tough. All right. I think there's overwhelming demand for specific use cases of DeFi for those who are coming in from the outside. When you hear about the price appreciation of assets, how people made money in crypto, and the liquidity that can be supplied or utilized by DeFi protocols, many who are not in crypto assume that they can easily tap into that liquidity or tap into that speculation and come out profitable in a short period of time. And I think it's much more nuanced than that. When we think about crypto's adoption typically leads by the consumer. If we think about the applications in crypto that really have gained momentum, even starting with Bitcoin. It was originally for just consumers buying and selling Bitcoin. Ethereum, there are developers, but developers are typically the consumers of the blockchain first. And even going into apps like Uniswap, OpenSea. So I think many who are not in crypto assume that if there's liquidity, I can tap into it. But for builders out there, it's important to think about who are the users today, who is going to be not only using the product today, but staying in the market and not leaving if times go low, if we're in a bear market and there isn't as much liquidity to tap into. So I think that's one of the biggest misconceptions is assumptions that others make based on the state of the market.
Ryan?
I think one, what's the opposite of a misconception? A conception? I don't know. One view people have that I think actually does hold some truth, but is starting to become a misconception, is this idea that crypto is kind of this circular economy where you use a crypto asset like Ethereum on a crypto exchange to buy a different crypto asset, and there's no kind of connection back to the broader economy or any sort of GDP producing activity. And I do actually think for the first time, protocols like TrueFi, protocols like Teller, and several others are starting to branch out and actually touch the real economy in the types of lending activity that we're doing. And so, I'll let Ryan talk about this, but one of their products is actually using USDC and underwriting to a borrower's crypto assets to be able to extend them a mortgage. In our case, we're also beginning to work with many traditional institutions to work with, real-world asset lending, as crypto people would refer to it, where we're working with companies across the world that are looking to borrow from crypto rails for the purpose of funding some GDP-producing activity outside of crypto. And so that is something that I think is maybe overplayed of how disconnected crypto is from the real world, and now we're finally starting to get into that. So.
Yeah, I can touch on USDC Home. So there is an underwriter in Austin, Texas, that wanted to bring mortgages on chain, and we worked with TrueFi to make this happen. Earlier this year, there was a home or condo in Austin, Texas that was financed with USDC. So the underwriter was able to do a standard credit analysis, a standard underwriting process as you would with any mortgage. And with that, the underwriter was able to convert cash into USDC. The loan was funded on chain, and the title company was able to convert that USDC back to cash, close with the seller. We're going to start to see more of these real-world use cases where now this borrower will be repaying or is repaying in USDC today. So the interest that is being earned is clear, and it's coming from a massive, massive market that many of these protocols like Teller, like TrueFi can tap into to offering these real-world yields. This is something that takes crypto out of the circular economy that we're in today and starts pairing it with genuine use cases supporting the entire economy of the US and many other places around the world.
Nice. So, Ryan, you mentioned education earlier, and with Decrypt, we try to have articles and learn articles that are easy to digest for people to learn about this space, Web3. Do you think education is the real starting point people should have based on knowing what this stuff is, knowing not necessarily how to get it, but what it does? And then also, do you think it would be better for them to start with a TrueFi or Teller Finance or with an exchange to learn how this stuff works and how it could be used for them?
Maybe going off of something I mentioned a little bit earlier, just about how people onboard to crypto today, right? 5 years ago, you discover Bitcoin and go down the proverbial rabbit hole and read all the books and all that kind of, wonkier stuff. And that's how I got into crypto. But that's not how people get into crypto anymore today, right? It's someone has a cool NFT profile picture and they want to figure out how that works. And then they need to buy Ethereum or some other gas token first, and they need to get an exchange account. And they're onboarding in what I think is a much more organic, consumer, user-friendly type of way. It could be the case that TrueFi or Teller is the same type of way that they onboard, right? If someone lived in Austin, Texas, and they were looking to get a mortgage, perhaps in a Google search they come across Teller, and that's how they onboard. And that's a pretty useful and behind-the-scenes experience, which I think in many cases is what we want to move to. Like, our kind of ideal scenario with TrueFi is that it is just this back-end architecture for a bunch of different lending platforms and applications, and if someone is interacting with our protocol and doesn't know they're doing that, that would be an amazing outcome for us. We'd be super excited by that.
Right?
I'm harping on that as well. The borrower use case has always been fascinating to me because I think it's a counter argument to how do you get someone in crypto? Well, many people around the world, actually, I think it's over 50% of small businesses year on year get access to capital through a loan. And they're constantly searching for new ways to get access to capital, especially with interest rates spiking today. It's a very competitive and interesting environment where DeFi can play in a capital efficient manner, serving the end borrower. And that would be really exciting. Same way Ryan brought up, if an end borrower gets access to capital and they see it in their wallet, they have the loan and they repay in USDC. They weren't in crypto before, but now they are. That'll be amazing because that's true adoption for true use cases in the real world.
All right. Well, thank you everyone for joining us. We want to open it up if anyone had any questions for TrueFi or Teller Finance. We have a few more minutes if anybody would like to. There's should be a mic down front.
Hello. Oh, you mentioned the back end piece, like you guys would just own the back end. Like, who do you imagine would own the front end? Is it centralized exchanges? Is it some other like who would own that front end? And then on top of that, would there be one like front end where all the users would be interfacing from, and then there's all these different back ends, and you guys own like money markets, or is it? Do you think there's many different front ends and everyone's trying to win like the UX and then you guys are just keeping that back end?
My view is that there's probably many different front ends, and our position is basically that we want to create the best on-chain infrastructure for the type of lending that we do. We want to attract the best underwriters, and if capital comes directly to the protocol versus capital comes from 5 different neobanks that are all offering different yield opportunities to their users, we're happy with both of those outcomes. I do think that just from a mass or kind of wider adoption perspective, these different front ends will be a better on-ramp for both individuals, kind of like Ryan touched on earlier. Like, even though it obviously did not work out in any way, shape, or form, many of these neobanks spun up to support Anchor in the past. The terror-related product where they were paying out 20% yield. I think that that is a good flow so long as you really, really hone in on the risks to those different users and help them understand what they're lending to, but also the institutional equivalent of these as well. And there's been a bunch, I'll just shout out one company that I just saw came out of Y Combinator. They're called Terrace.fi. They're just trying to be an institutional front end for different DeFi applications. So if you're an institution that wants to lend $10 million or swap $10 million or whatever it might be, they're an institutional front end to do that. They have KYC, they're regulatory compliant, and they work with the protocols to get comfortable with these different pools.
Yeah, I think the aggregation level at the user experience is important. You're going to see sites like a Nerd Wallet, but for DeFi, where you're able to access the best rates. But you're also going to see platforms like exchanges, as you mentioned, and different neobanks integrating this like borrowing opportunity for their users. I think it starts at the user use case and the demand that users have for capital and the specific ways they want to use capital. And different interfaces will be spun up, either integrated into current apps or new apps will be created for those use cases.
Any other questions? So I have a little bit of time. Anyone? No? All right. Well, Ryan, thank you so much for joining me today. It was a pleasure to meet you, and thank you for answering our questions. How are you? Are anything you're excited to see at Mainnet this year?
You know, I go to a lot of conferences, and I feel like I've perfected the conference scheduling, which is start meetings at like 10 a.m. every day, do that nonstop till 4, take an hour nap, and then go to the after parties. Okay. So that is, I'm pretty much booked up nonstop for 3 days with lots of meetings.
Right.
I love it. I'm excited to be here. And if you are building in DeFi and you want to launch any type of underwriting business, the title of this was Small Businesses. So sticking to that, you're launching your own underwriting business, come talk to us.
And anything can be a small business. Don't think that you're locked out just because you don't have crypto in your name or blockchain in your name. And check these guys out. More than likely, there's something that they can offer you that may be a benefit to you. So thank you, everyone, for joining us today. Really appreciate it.
Thank you.
Thank you, everyone.